Good morning, everyone. Welcome to the Metal Markets on Topstep TV. I'm your host, Deeyana Angelo, better known as Market Stalker D. If you're new here, I've been trading metals and energies for close to 20 years now. And I joined Topstep back in 2015 when I became their first female funded trader. My approach is data-driven. I lean on order flow concepts like market profile, tape reading, supply and demand dynamics, options gamma levels, and also some statistical averages to build some situational awareness in an effort to figure out the high probability areas where the dealers are expected to adjust their inventory, which then creates our lovely price movements on the day. So every session on the show, I'm going to break down what that data is telling us in the metals and energy space, identifying some anchor points, and then talking through some of my ideas and narratives that I'm seeing and some possible hypotheses. But before we begin all of that, of course, you need to familiarize yourself with the risk disclaimer that Bruno posted in chat. So make sure to read that so that we're all on the same page. Alright, now that that's out of the way, let's have a quick look on the daily charts, because we want to start our day by staying aware of what the larger time frames have done previously. Maybe not necessarily what they're doing at the moment, because this current daily candle is subject to change, but it can still provide us with some idea of what they're trying to do here. Just before I came on, we did have some Trump comments. What else is new, right? Happy Wednesday. And here is what he said. So he said, Trump on Iran, maybe end result will happen soon. Okay. Trump, no pushback from China on Hormuz blockade. Saudis also didn't push back on the blockade. I think the Iran war will be over very soon. I mean, yeah, so same sort of narrative. I don't even know who to trust anymore, because he keeps saying this and he's like, the war was over, and here we are like a month later. So don't know how much stock I will put into that. And then we have some comments from the Iran's Revolutionary Guards. Will not allow imports and exports in the Gulf, the Sea of Oman, if the US blockade in the Hormuz against Iran's vessels continues. So that doesn't really sound to me like it's going to be over soon, right? I think they're having a lot of sort of... And then Iran's top joint military command, armed forces would act to prevent the continuation of trade flows in the Red Sea. So that's the same thing. Headline risk, right? So let's see if daily charts can tell us something. All right, so gold has been trying kind of to push into an uptrend on the daily chart, running into a slightly lower volume area here, which is always a cause for some reversal. Whether that reversal is going to be sustained or not remains to be seen, but nothing really changes. I mean, I'm still looking at sort of this point of control up above 5,000, so that's 5,050 area as the next swing high logical touch, if you will, target, however you want to call it. And that's also where a lot of volume was traded before. So think of that as your supply, technical supply, but it also represents the institutional interest, right, from those very large time frames. Now, if this narrative of, you know, the war is still continuing, carries on, you know, I'm expecting gold to sell off, because it has been still pretty correlated with the equities, and equities have largely, yesterday they've kind of ignored whatever was going on. So it's like, oh, no bad news, we go up. And that's kind of interesting, because the equities always have this strong upward bias, and there will always be bargain hunters. We also saw Jessica in Skip the other day saying how she's seeing some very bullish positioning in her analysis, and yeah, she was completely right. Whether that holds remains to be seen, because, you know, if if they can't really find any sort of common ground, that's when we may see a sell-off in gold and in equities as well. Now, crude oil, daily chart, sort of a mirror image of that. So gold has gone up, but crude oil has gone down and then is trying to settle in this little range. But what I'm seeing on the volume profile, and the reason why I'm saying it's a possible range, is because the highest volume is actually in the middle. So it's not at the top, it's not at the bottom, and therefore this tends to be more, whether it's going to be accumulation or distribution, we won't know until they break out of this area. But for now, I'm just looking at all of this as a range and a potential to maybe find some intraday trades that will speak to a range being formed. There's several ways we can do that, but yeah, daily chart looking a little bit messy and rangy. Crude oil is a short bias product. If you look at many years of how it normally trades, sure, there were times where crude oil went up, but in the end, the short side is always much faster and more terrifying and spicier than the long side on crude oil. And it really has to, just like equities don't need to have a reason for going up, well, crude oil needs a good reason to go up. And if there's none of that, and if they're like, yeah, ceasefire or whatever, there are people that want to see crude oil below 90, ultimately somewhere in between 50 and 70 range. Nobody wants crude oil to go any higher, but geopolitical risk is geopolitical risk, so they have to do what they must. Having said that, the disruptions that have been created in the oil industry, they, I believe, are not really represented that well in the prices of crude oil, because, we are looking at months and potentially up to a year of disruptions in, the production of crude oil. And really, it should be up at like 200, not at 93. I hope not, but that's where we are. So a lot of damage has been done. So how they want to position themselves, or whether it's just going to be a case of like, I can't hear anything, just like put your fingers in the ear and just get crude oil sold, that could happen as well. But, for me, the crude oil at 90 when all of this is kicking off, a little bit suspect. So there are definite forces at work to try and stabilize the crude oil prices, not to, freak out anybody, but, you can't have crude oil all the way up at 200, 250. That would mean like semi-apocalypse. Nobody wants that, right? We do not want to start paying in bottle caps for the Fallout fans out there. All right, so let's move on to copper as well, because copper is still one of my favorites to trade. Now, copper is in a bit of a rollover. Looking at where it's going to roll, it looks like it's going to roll into July. But we probably have another week or 10 days, whereas crude oil is also rolling. Crude oil is probably rolling into the next contract by the end of this week, because crude oil always rolls sort of on the third Thursday of the month, whereas the metals, if they do roll, they will roll on the last Friday of the month. So that's a little bit different. Well, let me just have a look at copper futures just once more to make sure I'm not imagining things. All right, so let's see where the volume is. Yeah, so copper wants to roll into July, which will be HGN. The roll has started, but the majority of the volume is still in K contract. So yeah, just be mindful that there could be some weirdness as people are kind of rolling into the next month. That can be reflected in a more range-bound market condition, or just like an irrational move in one direction. So those are your daily charts. Let's get into the intraday levels. We're going to start on gold. Now, don't be scared. We will explain what's going on. First thing that I like to do, I like to mark out where Asia traded. More notably, Globex Open and Tokyo Close are the times that I consider the highs and lows for this purpose. You can see that we're sitting underneath the Tokyo low currently. It was created in around just before 7 o'clock. And we're firmly below it. So what do we have underneath? We have a pretty strong area at 4,800 that keeps popping up as an area of interest. And every time we sort of reach it, either from the downside or the upside, price seems to consolidate around it before it decides what to do. It remains a pretty decent area for orientation, but it really depends how today plays out. It could mean that we maybe tag a little bit below it because we do have some technical demands on this time frame in and around there, so maybe that will be the stopping point. They could wick it down into this lower volume node. It's not super obvious, but there is a mini cave in between 47.80 and 47.70, let's call it. Now, I am seeing some protective puts already starting at 47.50, so there are some people who are looking at effectively gold staying over 47.50, so that's also an area to look out for. And then to the upside, we had the gamma wall from the end of day snapshot at 48.50. That broke. But if we start rising back up, we now have Globex VWAP that is at this point in time lining up perfectly with that gamma wall. So if you manage to find some sort of a long setup that speaks to your style of trading and your plan, I would not be super surprised to see the market rise back up to 48.50 and then maybe start to kind of consolidate, perhaps even reverse. It remains a pretty decent area. When it comes to the Asia range, it is a pretty large range, and again, it depends how they behave in and around this gamma wall from yesterday at 48.50. Do I think that we could go higher? I mean, yes, if we have some sort of a solid negotiation progress, that would be bullish for gold and bearish for crude, and by the same token, bullish for equities as well, who don't really need too much pushing to go into an uptrend. All right, so yeah, that's gold levels. We do have the ADR. No, that's the ADR from yesterday, actually. That's not correct. But we do still have this moderate call wall at 4,900. Tokyo high was created just shy of that. What does that tell you? So I'm reading this as they are short calls. Who's they? The wizards. Dealers, right? I'm reading this as them being short calls from 4,900. So, we have plenty of space. If they ever get up there, I would more likely look for like a liquidity sweep past Tokyo and then a failure. Maybe if we get into like the COMEX close time, or maybe even in and around maybe even around the Euro close. Depends on how quick and how fast the rise might be at that point in time. But for now, the only thing I can say is that we are under the Asia range, which typically leads more to continuations, maybe with a bit of a pullback into the COMEX Open. And that is gold for you. Let's have a look at crude oil. So go down to the intraday time frame rather than tiny little lines bunched up. All right. Again, lots of volume built up here. My $400 profit was from the majority of this candle, because what I was looking for is a bit of a shakeout ahead of the Tokyo. I didn't expect all of this, so I only took a portion of it. But crude oil being crude oil, they just love doing these sorts of moments. But yeah, I think because I was on 2 micros, I took about 200 out of that, because I had an idea that they're going to try and test and probe under sort of 89. Didn't really think they're going to go all the way to 88, but there we are. So that's the deal here. London currently is sitting in a neutral day type, but it is a little bit skewed to the upside, and it is accepting value, and we have a put wall from the 0 DTEs right at 92.50 area. If we manage to create a consolidation here, I would look at that as the failure for further advancement and maybe do that fade. In fact, I'm going to try one here. So let's see if we can get some sort of momentum into this previous area of value for London. And if they don't want to give it to me, that's fine. No problem at all. So a lot of levels in between 90.50 and 89.50. So that whenever I see that, that's never, like if the price stays in that range, that is pretty much the range definition. And you know, you can look for maybe slight excursions outside of it, like we've seen crude oil do here. But ultimately, if they start falling back into that range, especially if we manage to crack 92 to the downside and sustained underneath it, we have a very good chance of testing at the very least VWAP, but maybe even this 90.50 level, and then the nice round number of 92. So we'll see how that plays out. ADR high for crude oil today is actually at 94.50, so there is some interest up at 95. We have the NYMEX value sitting right around there, so that's the edge of the value. They might want to hunt that for, you know, maybe the first part of NYMEX. Because NYMEX typically creates the new session highs or the new day's highs. So even if London attempts to do so, usually those attempts of London typically fail into the overlap. Then NYMEX kind of reverses after a pullback, makes another higher high, and then typically fails the auction. So that is something that I've seen a lot. But at the same time, the timing of the move failure, that varies like wildly. Sometimes it happens at my 11 o'clock, so about 50 minutes ago. Sometimes it happens right before COMEX, and sometimes it happens in and around this time. And there's really no statistical backing that can kind of tell you either side when's the exact time. This is why London is a bit trickier to trade, because for the New York session, you have the euro close, it's always at the same time. You have the post and my cut option expiry. Forex options expire every single time, every single day. And then you have London, and it's like, well, we have the open, and then not much happens until we get further into the day. So there's just a test. If this put support holds, then obviously this is doing something different, and I won't want to be in it anyways. But let's just give it a good old go. Let me just have a look at the tape, what they're trying to do here. So a whole bunch of large orders did go off right at 93. They traded out a bunch of orders, and you might be able to see that on the big contract. But they could be entering new positions as well. So let's have a look. So you see it's pretty thin on the big contract, but look at the amount of contracts traded around the 93. So you have 161, 65, 117, 102, 122, 91, 89, 129. What they're trying to do here, I don't know, because it's like, maybe, are they going long? Did they exit the shorts now, and therefore we're going into a mean reversion? That could be a thing. But it's just the time of day is a little bit odd for them to be doing that without any sort of news. So we'll see. If they continue higher, like I said, my next area of interest will be 95 for shorts. I'm not longing this today. And most of the trades I've done in the last several days have been to the short side. And they've been pretty fast and furious, actually. So not really keen on doing kind of long mean reversions in crude oil. And in my experience, longs on crude are so painful. They just take forever to get anywhere, and then one piece of news and it just throws up like 400 ticks. It's so annoying. So I prefer to be short crude, even if I get smacked on the face like a couple of times for like a smaller size. But then if I see them like really plowing in, that's when I go in with 2 or 3 position sizes and make the previous attempts more like tiny slaps in the face rather than a huge punch. And that's what we're trying here, so we'll see. The delta is not really that keen on this mild pullback upside. They might pick up speed, but we will need to reclaim 93 like firmly. And perhaps my stop here is a little bit too tight, but I don't know whether I want to give it room or maybe try again once they go higher. That's, you know what, I'm just going to stick with this because I don't really want to lose more than 75 bucks here plus commissions. So we'll just see whether that failure to advance is just taking a bit of time. I'm also going to scan through some of the lower time frames. I mean, 15 minutes looks pretty consolidated at the moment. 5 minutes, bearish engulfing. Touching the market shift point here. Let's have a look at Coach J's 3 minutes. I mean, it was a decent, I would classify this as a bit of a sweep, but we still need follow through from it. So yeah, I'm okay with this. Don't have a problem with this. In 2 minutes, same thing. So 2 minute time frame shakeout. They took out many trending candles prior. That's a strong shakeout. So now even if this fails, I don't really care, because this is all well within what I'm looking for a reversal and a mean reversion back down. So yeah. But I'm gonna maybe stick around on, let me see which one looks the best. Yeah, let's stick on 5 minutes. And while we wait for this to make a decision whether it's going to knock me out or whether it's going to start bleeding back down, let's have a look at copper levels too. So again, 30-minute time frame, increase this. So yeah, so copper is a little bit weaker to me than gold on the daily chart in particular, and I think it had a cleaner rise as well. So if you go back to the daily and compare how that looks compared to gold, like gold is still sort of in the bottom of its structure, whereas copper has gone all the way up. So it's like, how many more days of long candles you know, can we possibly have? So now we're kind of in the statistical probability of pullback is imminent, because we had 1, 2, 3, 4, 5 straight up days. And you know, copper has done that previously during very strong trends. I don't even know whether we're going to have data here. So we don't have data past February last year, but you know, look at the composition. Even as this was a strong trend. So here we go, 1, 2, 3, 4, 5. So maybe 6 days, and then it starts to mess around before it tries again and then fails. So, you know, I'm just a little bit skeptical of the number of days that copper has gone up. So I might be looking for some shorts in copper today, later on. We'll see. It's pumping into a low volume area and trying to reverse. But we are below VWAP at the moment. We are below the end of day gamma wall at 610. Now this was a pretty strong area last week as well. And I kept seeing it as a potential target if we ever kind of went higher. And indeed, here they are. Higher up, if we do re-accept the Asia range, I would see 615 being touched. And similar to gold, there is a strong options level at 615, so maybe a swipe through that and then a reversal later on, maybe into the euro close. And also, having said that, I do think that is a lot more achievable than gold, because gold had like a really massive move, right? So in Asia, whereas copper didn't. So tagging the highs of the Tokyo range is a lot more palatable to me as a good level that could be reached today. Okay, So that's kind of my view. But I'm a little bit short biased on copper, just a little bit. I don't like trading with the bias, but there are some days where you're just saying, okay, well, all the stats are telling you something, right? Maybe we have another day up, and then again, from Thursday, Friday, I will be looking for some pullbacks because nothing ever goes up in a straight line in this fashion. ADRs are very far away, so we have the 6 evens to the downside as a potential first level. Now this gamma wall for me is taken from the monthly options, so when you kind of zoom out and take all of the positioning, gamma wall kind of pops up at about 6 evens. So that would be like the first target for anything I'm looking at that way. And then really if they start to bleed below that area, 590, 585, I don't know whether that's going to be achievable today, but we can always maybe put them on the chart for the next day, and just to see how the relationship between those areas functions on a day-to-day basis. So what did I say, 585? But yeah, statistical averages right now, apart from crude oil, nothing is really in the vicinity. But yeah, just for general outlook, ADR high on copper is sitting around 620, and then to the downside, we are just above that 6 even, so 601, it will be somewhere here. So right around there. So I just do that. And then to the upside, why that didn't save my line? What the hell? So what, you go into stats and it deletes all of your lines. That's not cool. What's up with that? Alright, so 620, roughly ADR high. There we go. Just above it, right? I'm not going to put ADR high, ADR low. I can't be bothered, frankly. Alright, so we have some more selling, trying to do the reversal here on crude oil. Let's see if they give us follow through. Come on, come on, come on. More orders went off, so around 92.85. 117, 125, 161. What do I use to get gamma levels? An API ping, which is quite expensive, so not really something to recommend. But there's Mental Q, which is very affordable for retail, or reasonably affordable. So you can start with that. So you know they give you like pretty decent levels in like the options chain. And you can basically see, even if they might be called something differently, they will still pretty much put, you know, the levels that are marked from GEX 1 to GEX 10. So GEX 1, 2, and 3, in the way Mental Q does things, represents the higher open interest. I do extra crunching on data where I take the open interest, but then I also take some Greeks, and then I kind of do my magic and spew out anchor points. But even then, on some days you have these like jammed up areas that are all kind of flagging a range. So you're like, well, they don't even know what to do. So yeah. Sandeep says real barrels are over 150. How come CL trading is below 100? Well, this is the futures market. It's not spot. And right now we are in a backwardation, which means that the futures prices are so contango is the normal, right? So that's when spot tends to be less expensive than the futures, right? So spot is under. But when spot becomes more expensive, that means you have a problem in either a supply or demand of some sort. Anytime a market is in backwardation, it always spells some sort of supply issues. So that's why, okay? And that's why these are the futures. They're called the futures. It's not called the spot. RGL says, what does the stacked bar chart on the right represent? That's the visible range volume profile. So basically, kind of a same view of technical supply and demands, but in a little bit more of a visual cue and using volume rather than just pure price action. But it gives you the same idea. So you can see that there was a lot of volume traded here. Then we have a little gap, and then we have, you know, more volume traded here. So low volume nodes are typically looked at as areas that can give a bounce on the first try, but second, third, fourth try, you expect them to eventually break and then just rotate through to the next high volume node. So that's one way of looking at it. But it's a similar concept to, like, let's say looking at just pure candlesticks. So you have quick movements here, right? So these two candles, what's that? Well, it's low volume candles that kind of just run away. That's an area of interest. Call them single prints, call them FVGs, call them low volume nodes. It's all the same thing, frankly. So, you know, it is all the same thing. Right, should we have a look at silver maybe? Silver I do look at, but I haven't been talking about it too much. Nothing has changed drastically for silver, but I would say that it's a bit cleaner than gold, like in general. I think it's just a cleaner move. Anything is cleaner than gold. Let me delete that. Yeah, bit spiky, but the breakout yesterday, that looks pretty clean. So nothing much has changed. So we still have 80 as the gamma wall, and we just had the silver fix go through. So a little bit of volatility expected as they try and make a decision. Silver fix is nothing more than a benchmark, so it's like settlement, right? So you have settlement prices. Well, this is similar. Wow, the volume profile is a bit toothy. Like, what is that? So you see these like choppy areas. That's probably not going to be super smooth. We would need some news to like slice through that without pain. Not ideal. But when it comes to levels, same levels, nothing's like really nothing's changed. Gamma wall at 80, 77 is the point of interest to the downside. Oh, interestingly, gold is trying to bounce from the value high from London. I didn't see that before. But yeah, so very similar to gold. So, you know, I wouldn't really don't think I'm going to be grappling with silver today, quite frankly, because I don't like the toothiness of that profile. It's a little bit too sketchy. But yeah, so let me just show you what I can see on gold here. So I'm going to take as a fixed range and then anchor it to the London start from yesterday, and then all the way to the beginning, roughly, of COMEX. And then just to visualize this, I'm going to plop a line here. Now on the TPO, I've actually had the TPO value high a little bit higher than this. Clickety click, clickety click. Okay, we're almost there. We're almost there. So this line is effectively the edge of previous day's London value. So we're getting a reversal from that. That can be a pretty decent reversal setup into COMEX, but I rarely hold my trades past COMEX. Like usually when I finish the stream, whatever trades I have, I might hold them for like 5-10 minutes and then I just kill it, right? Very, very rarely will I hold the trade into something because it's not, yeah, it's not good because it's too much volatility and you can like get really quick reversals that kind of either eat up like most of your profit. The only time I will leave it in is if I've had a trade in Asia, which I've been trading a lot less. So I've been trading kind of like pre-market Tokyo, because otherwise I have to go to sleep. And then I wouldn't really do anything until the early morning. And these days, you know, if I'm awake around 7, which I am most days, I might have a look at that Shanghai take profit move. Or if it's nowhere near the lows or highs, I will look for the closest high or low and then a liquidity sweep into that before they kind of reverse it. So those are kind of my setups that I do either early in glowbacks or pre-market London. JKX says PDT rule being discontinued this month. Yeah, I did hear that. Right, crude oil still stuck in this range and just bouncing around. Did we have any more news? Let's keep an eye on financial juice, so we don't want to take our eyeballs, take our balls. Yeah. Well, you definitely need some balls to trade these markets for sure. Mediators move closer to extending US-Iran ceasefire, officials tell AP News. Don't know who AP News is. Anyone know? Because I've never heard of them. But I'm in England, so what do I know? But yeah, I don't know, guys. I think everybody's just waiting. Xi said he's not sending weapons to Iran. That was half an hour ago. Okay. Good to know, right? But yeah, so let's get off the 5-minute chart here because I feel it's a little bit too spiky to figure out what's going on. And let's wait for like the next 7 minutes. If I'm still alive, I'm still alive. If I'm not, then we're going to sit on the sidelines for a bit. But why do I think that they're trying to make a decision here? I'm just getting like the sense of where the price is. It's still inside the value area with kind of tight point of control. Every time they try to go lower, there's a whole bunch of orders that kick off. And, you know, this is quite an interesting outlook. And we had that shakeout candle that reversed. That currently is the highest volume on the day. So those typically, so see that? Maybe we can anchor a VWAP to that because it gives a nice visual representation of what they're trying to do. And I just use the overall VWAP, so not the high, but I want the kind of the average, because I'm looking at whether we're still maintaining underneath that whole structure or whether we're like trying to break out. And right now it's clearly underneath it, so yeah. But if they decide, this could be a quick return, at least to 92, maybe even to 90. But my target is sort of like right in the middle, just sub 91 to kind of pop off some stops. I do think that 90 would be a good target, but we might run out of time for that. So I'm just going to grab whatever I can. Why do I prefer to use session fixed range volume profile rather than daily? Because daily is more supply and demand dynamics to me. It doesn't, like, I need precision or some kind of timing. If I'm basing something off of a large area of supply and demand on the daily or 4-hour chart, how is that going to give me precision? And I'm not really like, oh yeah, I need to be like super precise. No, but I need to be precise to within like, in this volatility, 75 ticks to 150 ticks. So if you were using a level, like have a look at it, you'll see what I mean. So let's have a look at the 4-hour time frame. This might take a while to load because I don't really look at a 4-hour time frame too much. So let's say that I'm basing my idea off of this entire demand area, because this was a demand, this huge pop down. Where do you think it's going to turn around if we ever get down there? Here, here, in here, in here. Like, it doesn't tell you anything. It just tells you that there's a low liquidity node there. But the low liquidity node is spanning $240 ticks. Just a swipe, right? Just the wick. You know. So I need something else that's going to tell me that we're falling back into the value of the session that we're currently trading. And fixed range volume profile per session provides me that. And I'll show you what I mean. If I didn't explain myself properly, maybe I didn't. I don't know. But let's go through it again. That's what we're here for. Right, let's make this super large. Massive. Alright. Look at this purple area. So I've anchored the fixed range volume profile to the start of London. They tried to go higher, and the whole volume area is above 90, right? It's above 91. So there it is. But as soon as we tried to get outside of it, the price fell back into it and is now struggling. So I have another little thing that I look at, which is on a 5-minute time frame, which of the volume bars is the highest. And that tells me usually the exhaustion point for this time of day. Obviously, we might have another one later on when more volume is trading, but right this minute, this one, so the bar that got created at 11:14 my time, that is the exhaustion volume bar, the largest on the day. Those tend to be very difficult to run through in a clean breakout, and that's it. Could it happen? Yeah, absolutely. Another piece of news, and you know, that's going to be it. So this is the headline risk. You can't do anything about it. But what you can do is just do your best to figure out what is happening right now. If there's a market state change, that's outside of your control based on what we have right now. So right now, we're back inside the developing value of London session. Nothing else. That's all I'm seeing here. We have a volume, low volume area between 92 and 91.80. So that would be like the first area where I might want to see a pop into, but it will be a second test now. It wouldn't be a fresh test where you expect this sort of thing. So bouncing into a low volume and then coming back up. But we failed to advance higher past the developing value. So that is usually bearish. So what do we expect now? First, the test of the low volume node. Ideally, test of point of control, which is currently, in this case, at 91.48 on the visible range. But we're trying to tackle it on the fixed range volume profile all the way up here. So right now, they're attempting to go below it. Does this make sense? So this is how I create situational awareness. It's like, this is telling me this, that's telling me that. We had a high volume sweep and a failure on the first try. Highest volume bar, exhaustion point, anchor and VWAP. Where is the price currently? It's inside the London developing value. It's trying to tackle the London point of control. We have the bigger point of control further down from like a slightly bigger outlook. And of course, we got the option levels. So we have 92 as the end of day gamma wall, but we have some bigger levels further down. So we have one very good one, moderate put wall at 90, which I'm kind of seeing as protective puts. So if we start to roll back down, they might want to do something around it, or that could be an area for the dealers to keep selling because they maybe are, you know, looking at short puts at 90, but when the price starts sustaining below 90, they have to keep selling, which will amplify the downside movement. We don't have that right now. By the same token, they might want the price to stick above 92. They might have a short call there, right? So if they can't have enough inventory to push the price back below it, they're now losing money. So they're going to have to start buying more and more and more. So really, this is now an attempt of dealers to put the prices back below 92. That's my interpretation of it. We can never know exactly what they're doing, but you can kind of figure it out from, just like situational awareness and the narrative, the narrative that this price action is trying to create. And to me, it's just rotating into the value. So right now, a little bit rotational. Oh, Associated Press. Thank you guys. Thanks. Appreciate that. For full port 10 full CL contracts, Pat M says, well, no. John says, don't fade the Mariboso candle, Z. Where do you see a Mariboso candle? I don't see any Maribosa candles. See a lot of selling wake candles. And a lot of mess here. Yeah, which time frame are we talking, dude? Inverted dragonfly. Is that a thing? I have no idea. I only focus on pure price patterns. So it's like, isn't dragonfly a doji? And it can it be inverted? Or is that a graveyard doji when it's like from what I remember. But yeah, I use bearish engulfings, which is a 2-bar reversal, 1 candle engulfing and then some, the body of the previous candle. I use morning and evening stars, 3-bar reversals, as Dakota likes to call them. But I also differentiate between morning and evening star and 3 inside up and 3 inside down, where the middle candle is not a doji, but it's actually a small green or red candle, depends on the direction. And both of those have slightly different connotations for continuations, but this one was just a bearish engulfing. Again, 5-minute chart is a little bit too noisy for me, so I'm going to see what happens here on the 15 actually. So for now, this put wall at 92.50 is still causing trouble. So there's still some interest there for some reason. What are you doing? Now this anchored VWAP is from the highest volume bar yesterday, and I took that from a 30-minute time frame because I don't need to go down the rabbit hole. Here's a good question. JKX98 says, how often do you move stops to break even or take it off too early? Is this a purely rule-based or subjective? I never put trades to break even. I will take the trade off early in a couple of cases. So let's say that everything is going fine and we start to go below my entry. So, we spend maybe 30 minutes in it and now we're looking at 100 tick profit. But then something happens and suddenly it goes pretty much straight back to my entry. I'm immediately closing down that sucker. I'm not waiting at all. And in other ways that I might close out early is, let's say I've been in profit, the market is doing whatever, but we now have NYMEX about to open. I might give it about 5-10 minutes if it opens, but generally I expect a head fake. So I expect it to go largely against what the move will end up being. So kind of like a counter trend indicator, if you will. So if that is sort of against my trade direction, then I will sit out for the first 30 minutes to see whether I can get back to where we were in the next 30 minutes. But largely, if there's a NYMEX open and I'm only sitting in like 50 ticks profit, I'm just closing it and taking it because I'll find another trade later. I don't need to sit in the madness that is high volatility of the open. And when it comes to trading stops, I don't personally like to trade stops because most of my hypotheses are either correct and we go to target. In this case, that would be a final area of 90, but my target is not like right at 90. It's like a little bit higher, quite a bit higher actually. So I'm not being super aggressive on the target. It's just 2 to 1. And in this case, I think we have a decent chance of rotating back down there. However, if they get up to, like, let's say, this high volume area here, there's a lot of congestion, and we start tagging the value low, and then they are not pushing even lower pretty quickly, that will be my early exit. So a little bit ahead of what I wanted, but that's what the market is giving me. And why would the exit happen there? Is because the value low is there. So if we are in a more rotational environment where we're now establishing the value at slightly higher levels after the Asia range has done whatever it's been doing, now we have another reference point of where the distribution curve is. And if they're not able to quickly push past lower into like the sub-developing value area, to me that's like, I need to exit. I'm done. But I don't really see the point, like I'm either right or I'm wrong. I don't really see the point of me messing around with trading stops when most of my trades, once they start going, they generally go to like 1.5, 1.3, 1.7 R at the very least. And I'm always annoyed with myself. That is actually one of my mental triggers where I'm like, ooh, I'm 50 ticks in profit and I'm going to put it to break even. And then it knocks me out. And then 15 minutes later, it's at my target. So I'm like, you know, like Homer Simpson from The Simpsons. That's when I just want to take the price action and go, you little... It really throws me off, man. So I don't like doing it. But another point, when I run the Monte Carlo simulation on crude oil, in this environment, what would be the safe trailing point where you won't get shaken out? And the way the Monte Carlo simulations are done is that you take each, like, let's say 5-minute time frame or 30-minute or whatever time frame you want, and executing simulated orders at every start of the new bar. And then you see which of those would survive in case of a regular sort of MAE, MFE movement, so up and down, ebb and flow of the price action. Well, that number on crude oil at the moment sits at 175 ticks. It's just that whippy, right? So if I have a target of 150 here, or maybe 200, does it make sense for me to start trailing once I'm already like 75-80% to target? Like what possible use could that have? Nothing. So you might as well just take the 1.7 R, okay? So from a mathematical standpoint, crude oil is not the best product to try and trail anything. Copper is probably a better bet, right? Because copper has a cutoff point at about... It used to be 50 ticks, now it's more like 75-80. But because I use 55 tick stops there, it does make sense that if the market kind of moves to 80 ticks, maybe I can protect it. But crude oil, absolutely not. Because it's just so incredibly volatile right now. So yeah. Pat M says, same, I get so angry when that happens. If I fully accept risk, I would just let it run to stop loss or take profit. When I'm feeling defensive, that's when I fool around with stop losses like that. Absolutely, that's how I feel as well. I know that there's some people who are absolutely fine with getting stopped out for nothing after putting all of that mental capital. But remember, I don't trade 1 million trades per day. If I am doing that, it means something's happened. I'm either having to deal with something outside of trading and I'm just basically putting my emotional frustration into the P&L, which can happen, or I'm not at the right level. I'm getting involved in a frankly bullshit level where there's no institutional interest and they don't really care. So I'm just getting involved in like choppy price action, not realizing it's chop, but just going long, short, long, short. To me, whenever I start flipping and flopping like a fish out of water around the same level with directions, it's immediately like C game for me. It's like, what the hell are you doing, Lee? It's like you wanted to be a seller here. Now suddenly you're in long, and then now you're short, and now you're long again. It's like, can you just stop? So those are the conversations that I have inside my own head with myself, like a completely normal, not crazy person. Frankie428 says, hello Dee, I hope you're doing okay today. I am. The meds are okay. I'm not having side effects. I did have some vivid dreams that they talk about, although because I increased my low dose naltrexone now to 1.5 milligrams, and last night I went to sleep and then suddenly it was so weird. It was like a collage of whole bunch of stuff, like a lot of dog pictures, but a very kind of scary stuff, but just a collage. Like there's no narrative to it. It was just like pictures. That was a bit weird. Can you trade anything without being affected by Trump tweets and news because current geopolitical events is killing my trading career? Yes, you would have to look at some ags. So cattle, lean hogs, soybeans, corn, anything that is agricultural, that is doesn't really care about Trump, doesn't care about Iran or anything like that. But you may find that you have to learn more about those markets. I highly suggest that you go into Coach Hoop's Discord classes, because he's a specialist for live cattle in particular, and he's amazing at it. So you can ask him questions. He can tell you all about the WASD report, and a whole bunch of stuff that goes along with it. I personally am okay with these markets because I like them. And I've lived through a number of sort of disastrous events that affected us all globally. So therefore, I'm not really scared of this. I just kind of size down and I still know what I'm looking for. But if you find that you're struggling, you really need to go away from anything equity, metals, energies. Just don't touch those. But go to ags. That would be my suggestion. SRGM says, add a contract or two if you're so committed. Yeah, because I take my risk models from chat. That's exactly what I'm going to do, mate. That's sarcasm, in case it's not coming through. Nice t-shirt, thank you. Yeah, I am in selfie mode, obviously, so this is a little bit topsy-turvy, but it says Topstep. Pat Sam says, oh man, naltrexone dreams are intense. I got a 3-month injection of that. It was wild. Yeah, well, I didn't experience the wildness yet. I just had a whole bunch of weird stuff. But it's good because I actually haven't dreamt of anything for years. I don't know whether that's a product of this illness that I've got. But literally, I don't remember last time I had a dream. That can't be good, right? Frankie says, how can I join? So go into Discord Topstep, right? So it's 200,000 people now, 175,000 members. But what's so unique about Topstep Discord is that each of the coaches who do classes in Discord, obviously some of us have our own shows, so we're not going to be also doing things in Discord, right? That would be like a little bit too much. But, we do run like VIP sessions in there. However, a lot of the coaches that you see kind of appearing on Topstep in different segments, but they don't have their own show yet. They have their own show in Discord. They have classes that run daily, like pretty much throughout the entire day. And that's where you can look at the schedule. So let me just see if I can show you that quickly. To make sure there's nothing untoward. Events. Okay, so here we go. Can I move all this? Should be able to. Yeah. So that's the Topstep Discord, right? And this is when you click into events. So it says 10 events. So you have Coach Paul Pivot Hour every day at 1:30 my time. So that is basically just when during the opening call, right? So he runs a pivot class. Then we have today, my 4 p.m. we have Fireside Chat with Coach Jack. He's a corn trader, by the way. He's JD's dad. Incredibly knowledgeable. He is an older gentleman, but he is also all right. Something came out. But he's also kind of a no-nonsense type trader. Like, he will tell you like it is. He's been around the block. He's definitely a no-nonsense guy. I'm kind of itching to know what JT's childhood was like, because, then you have the Tech Talk with Coach Robert. Then you have, here's Coach Hoop. So today at 11 my time, that 11 p.m., that's during the evening, Futures Fundamentals and Freelance with Coach Hoop. So you want to go in there and you want to ask him a whole bunch of questions. Then you have the Market Review and Q&A with Coach Ray. He's one of my early market stalkers, but he has his own style now, which is amazing. And we have Volume Profile and Technical Analysis with Coach Vince. Vince is another profile trader, extremely knowledgeable guy, right? Love Vinny. Vinny two ticks, isn't it? And then you also have other different classes. Control losses with Coach Jack. Again, Coach Jack does a lot of stuff. So, a lot of events in Discord that you can learn from. And just go in there and ask a whole bunch of questions, man. All right, so let's see. What do they say? Iran says the level and type of nuclear enrichment is negotiable. Okay, well, that's good news, right? Iran's foreign ministry spokesperson, it's highly probable that Iran will host the Pakistani delegation on Wednesday in continuation of Pakistan talks. I mean, again, that's all bearish for crude oil. Like, what are you doing, Crude? Crude, don't be rude. Come on, Crude. Don't be rude to me. Should we do like a crude oil blues? How do you trade metals? I've tuned in about 3 times. Seems your specialty is the metals market. Both, really, energies and metals. Sometimes I trade copper. Mainly for this time of the day, I will focus on either copper or crude oil. So gold is a little bit tricky because there's not much happening, but copper has the LME, which is London Metal Exchange. So there is some volume that starts to kind of trickle in into the markets. But copper, typically you want to, the simplest way that I would start someone off, there's a lot more to it, but just mark off Globex high, the highs and lows between Globex open and Tokyo close, not the Shanghai close, because there's an hour's difference between the Tokyo close and Shanghai close. Why? Because frequently Shanghai close wicks out either the high or the low of Tokyo and then reverses. And the same thing applies for trading Asia in metals. So a lot of the times when you see me coming in with like some P&L for the day, that's not going to be early London. That's usually going to be either beginning of Asia or the end of Shanghai, right? So it's always the same thing. But Asia range is so important to figure out whether you are waking through because Asia brings price discovery, right? It's the first session where you can kind of tell where the interest of institutions are because it creates highs and lows at those price points. On a lot of the days, there are excellent ways to use that. So one would be a wick above the highs or the lows if we're still Asia bound. This can happen, like I said, pretty early, but it can also happen during the later parts of COMEX into the London close. They tend to be pretty good orientation points. So if we turn around here and go all the way back up and then London close is upon us, watch out for the wick through the Tokyo high and a reversal. Why? Because enforced hedging happens into settlement. But if you see a breakout that happens kind of early-ish during COMEX, not right now, because this is a tricky part to play, then you may see a little bit of a move that looks like a breakout, but then COMEX starts to pull it back. All right, guys, I've spent enough time in this crude oil trade begging for it to go somewhere, and I am begging, so just gonna see if I can bail out of this. Because, I mean, they're just wicking around, and it should be much faster. So let's see. What's going on here? Let me just see how order flow is doing. Yeah, let's just get out. This is the type of a trade that should happen quick. Okay, so the failure of the auction, which I call the auction fade. Why? Because we're not at the initial balance, we're further out, so it's an auction fade. It doesn't take this bloody long. Okay, so at most I want to give it like 45 minutes maybe, but if it's already not like deep back on the way to initial balance, this is something different. So I don't want to be waiting. So only one contract, yes, because crude oil currently has 752 ticks of range on the day, so even on one contract I can easily grab 400. Yeah. Let's see what's going on there. So Mo says, I'm so close to hitting my personal loss limit. I find myself rooting for D's MCL short, which is kind of the opposite of my M&Q short, just to be put out of my misery. If you're so close to your daily loss limit, I would just call it a day. Are you a breakfast person or rather intermittent fasting? Intermittent fasting through and through. John Jones saying good morning, good morning, good morning. Where do I live? Is it London? No, it used to be London. We bought a brand new house. Well, it's not brand new. It was created in 2018, but it's a modern place in the countryside in Surrey. So I lived in London for over 20 years. And I'm sick of London. But intermittent fasting through and through, definitely. Joey says, hey, yo, dude. I actually don't like eating in the morning. My morning, like breakfast is maybe a piece of bread with my naltrexone, and that is basically my life elixir at the moment, and coffee. That's it. I rarely eat anything before like midday, 1. Sometimes even 4 p.m. comes around and I'm like, oh, hold on, I haven't eaten. I'm just not that obsessed with food. Who are we talking to, Mr. G? Let me see if I've missed something. Oh, right. Okay, we're not going to be reading that. Where am I getting my news from? Financial Juice. No, I don't pay for it. Just a free one. USO broke out of a 2 or 3 day downtrend. Again, I wouldn't read too much into it, Chicken Biscuit, because again, I know that crude oil is super reactive, especially now to news, to anything. So it can change in a flash. But I'm just looking at how the dealers are positioned, and I'm seeing protective puts below 90, actually into the 88s now. However, this whole area where we have like jammed up areas, this is why I was in a short, like 92, 92.50, 90.50, 90, 89.50. That's unusual to see, right? So really the only clean space that you have is if they finally break this 92 and go down towards 90.50. But right now they're just jammed in this area. Anything can happen. It's like we're coming into the pre-market of NYMEX, and it's like I don't want to keep sitting in a position that should have done something already, just like hoping and praying. So it's like it should have gotten there. It didn't. The end. I used to live near Surrey Hills, Raphael says. Very beautiful. Yeah, so we are kind of Surrey Hills. I mean, this whole area is considered Surrey Hills. I hear that Eric Clapton lives not too far from here. How long do I think that the volume profile should cover? Well, which volume profile? Fixed or visible range? It's two different questions. Because for me, actually, visible range, I like to look at least like a day's worth, but then if I'm on a larger time frame, 3 or 4 weeks, just to kind of see where they position themselves. Yeah, and they're still just touching the gamma wall, end of day, Probably back up. Touching the wall, probably. It's like, make a decision. This is where I need to sit and wait for better price action, because right now it's literally jammed between 92.50 and 92. We don't want that. So if we're talking fixed volume profile, then it's whatever the session is currently. So right now this is London, so my session profile is anchored to the start of London to current time. Once we get into COMEX, this one becomes pretty much irrelevant, and then I anchor another one at the start of COMEX and then keep going. So it provides you with like a market generated information that is fluid enough for you to make some sort of a narrative around what they're trying to do, right? So looking at developing value. Now POC is POC is an interesting area of the highest volume, but I usually like to pair that with some sort of exhaustion volume candles if I'm looking for a reversal. This one was an obvious one, but we just didn't get any traction, and that's fine. It's all we can do, right? What is really important is for you to stay objective. So, just because I was in a short, I was perfectly aware that 92 could be all that I'm seeing here. But I was looking at a big of a break to the downside with a short bias because of ceasefire, because of talks, because of a whole bunch of stuff. But basically I was just looking for a little bit of a throw up towards the 90. Didn't get it. Crude oil not hung over today apparently, so they're still holding. NQBot Live says, appreciate the live stream, not many do it consistently. I'm building a 23.5 AI NQ analysis stream myself, still refining it. Awesome. If you ever get a chance, check it out. I would value your feedback. Sure, yeah. Let me click into your profile and I'll sign up for sure. Now, I don't know where this is gonna take me. Okay, there we go. Subscribe. You've got a new subscriber. Thank you, bot. All right. So yeah, 92 so far, holding. Delta is turning quite positive, so that's that's interesting. They're obviously not seeing these news as like positive enough, because they're like, yeah, hell no, crude oil needs to be back up in 95, 100. Good morning, Jay. Always good to see you. I love the shades you've got on your profile pic. Coach Jay has joined us, guys. Where's the cow hat? Well, we're not holding this trade or the trades that I've done until the cows come home. They've been a little bit on the quicker side, so yeah. Spice Girls vibe, really? Just don't say I look like Scary Spice. Where's the cow hat? Cow hat is reserved for swings, right? There's no swings today. Yeah. Where do I get the delta from? Bookmap, CBD. So if I just drag this down a little bit. Now my one starts at London Open. Hogue one starts at RTH. So a little bit different. Because I want to see the delta that London has done, primarily because crude oil trades quite a bit during London these days for some reason. But yeah, so you can get pretty good information out of it. Alright, so let's see what the metals are doing with this indecision. Nothing. Look at that. This looks like a bit of a bear flag to me. I don't know. I'm not really a huge devotee of bear flags, but yeah. We need to wait for more movement. This is all just like jammed in like various ranges. So we need a decision on copper. Are we going to throw up? We're going to jump off a cliff? Or are we going to re-accept Tokyo and then rotate past the gamma wall all the way to Gex2 at 615? That's definitely a choice as well. Pat says TradingView CBD is pretty good too. I've never used it, but if you say it's good, yeah. What are my thoughts on silver? A little bit toothy in the profile. I did briefly look at it earlier. And what I didn't like is the fact that we had this sort of stuff going on. It's like low volume, higher volume, higher volume, low volume, higher volume, low volume, higher volume. It's like, what is that? It's like somebody knocked its teeth out, right? And it's like it didn't do the dental implants yet. That is never comfortable. So it means you're going to get a lot of push, pull, push, pull, push, pull. But the bigger anchor points, I have 80. So 80 to, there's a kind of top side orientation, maybe a test. And then I have 77 to the downside. Not really too much in between. There is a London value that is kind of interesting at 78. But once we get into COMEX value, that changes drastically, and that's not going to be similar at all, I don't think. Oh, crude oil, crude oil, crude oil, it finally moved. Okay, look at that. That's what I was looking for. It's all right, we'll get it. We'll get it again. But yeah, it just took forever. They're just waiting on news. They're like hanging on every Trump tweet and then immediately pulling it back. So now if this comes back over 92, I probably wouldn't have been quick enough to take quicker profits at VWAP anyway. But it's touching VWAP, bouncing immediately from it. So let's see whether this follows through to the upside. I'm not going to be long crude oil today. I will still be looking at 95 maybe for a failure again and a reversal. If we never get up there, I probably won't be trading. I'm sorry, my dogs have come back from doggy school. And they are now all just going crazy. Let me just shout at them for a second. Okay, a little bit better. You're gonna have to wait, guys. I'm busy. Grandma D busy. Boy band says gold is bearish. I don't know about that. My dogs are about to murder someone. Yeah, probably each other. That was 4 of my dogs coming back from doggy daycare, and then the other 3 younger dogs going absolutely mental because their pals are back. And they're also reacting to crude oil news, of course, because they're my dogs and they trade better than most. How did I add GAX onto my chart? This is how I added it. Horizontal line, place a line, name it. We don't have third-party indicators yet, so all of the stuff in the lines that you see on my chart, unfortunately, are made by me. But I am taking it from my indicators that I have on some other platforms, so therefore I already have a reference. And we even post the my anchor points in crude oil, which are a little bit different than most, in my sort of utility Blotech Discord thingy. It's not a community per se, it's just literally an area where we print levels. They are not narrative, you don't get hypotheses, it's just like, this is what the data says, these are the levels. This is where the average central ranges are, blah. You do whatever you want with them. So it's not like, oh hey, I can go there to Pester D for like trading advice. You're not going to get anything, because most of the time it is one of our IT guys who's in there. So you're not going to get anything out of him because he's not really a trader. So he just does what we tell him. So yeah. But yeah. So yeah, I would love to build the custom indicators to put these levels on the chart and a whole bunch of other things like my ADR levels so that I don't have to do them every day, right? I would just arrive and that would be it. But this way I have to spend like 20 minutes on each of the charts to figure out how we can position our stuff. What is the news? It's going to be a Trump tweet. Here we go. Trump on Iran. Didn't he say this already? China agreed not to send weapons to Iran. We had that at 10:30, 11. We already had that. Why is that focused now? This is so annoying. Have you noticed? I don't know. Those of you who use Financial Juice, they like print a headline which is not red, and then they reprint the headline and it's now red. Like, do you want to like sort your code out, maybe? Like tag the high impact news with the right color on the first try, maybe? Trump went around, they are going to make a deal. He's very deterministic, isn't he? He said a lot of things recently. Anthropic threat is not systemic, we'll work it out. I mean, he's right, yeah. Although I don't know whether he's right. If, they are changing the game, so don't know where, I don't know. I'll have to look more into that statement, because he could be right, but yeah, don't know. We might be underplaying the role of Anthropic. We'll see. Cumulative delta, is it on Topstep? No, so I have it on Bookmap. Other people have it on TradingView. So yeah. What's the bias now? Nothing. It's the same thing. Nothing's changed, guys. Like, look, this is where the options levels are really good. So basically, if we pull back over 92, I'm just going to be looking for a move towards 95, but not trading it because I don't want to be long crude. Every time news comes out, crude oil does a tactical chunder, as we like to say over in the UK. What is that? It's when you're on a night out and you're drunk, and then you feel a bit sick, so you go into a little throw up, and then you come back and keep drinking. So that's what crude oil is doing right now. But nothing's changed. 90 is still an orientation point, moderate put wall. We have a whole bunch of protective puts, sub 90 and sub 89. So if that goes, then I would look for the market to sustain below 88, maybe tomorrow. We also have the inventory report today, which is probably going to be more important than it has been in a very long time. Can it touch 90? It can. Will it touch it now? I don't know, because we're going to have COMEX and NYMEX kicking in, so there's going to be a lot of volatility kicking off. I'm going to be waiting for closer to the London close, maybe. I will be on group coaching, so you can kind of join me. Maybe I won't trade until the final sort of 90 minutes of NYMEX. So that could be something. If we are up at 95, that would be a good one, because we have value low. I'll tell you where exactly. Value low from NYMEX is actually 93.85. But with the volatility, they could spike it into 94.50, which is exactly where the ADR is. So if we exhaust the ADR and there's the value low from yesterday in the vicinity, that is actually a very strong setup for the end of day. If we're not there, then maybe some kind of a failed auction ahead of that. Maybe they take out the London high. That happens. Then they fail into the Euro close. If it's a long failed auction, I don't want anything to do with it. If it's starting to extend the initial balance very late in the day, so we're already into like the London close, it's New York lunchtime, it's like 12 p.m. in New York, and you see the market breaking outside of the initial balance, crude oil specifically, that's too late for a failed auction, and you're probably looking at a continuation, because at some point failed auctions on crude oil are basically non-existent for the latter part of the session. I think I might have, like when I did the stats for this, I think I may have seen like in the last 12, 13 years, I might have seen like 7 of them happening late. Like that's how rare they are. And sure, they can be caused by news, but again, the fact that we're not extending the initial balance for such a long time into the NYMEX session, that's not normal. So really, you want to look for the failure of the auction fairly quickly. And sometimes another thing that crude oil does, it pumps outside of the initial balance, but it's not a sweep. It's not like a quick velocity pop. It's just like, oops, we got out of it. That's not a real failed auction. So it might look like it failed, but just mark my words, you will get another sweep before the real failure begins. So yeah. CL volume still higher on the CLK contract, but CLM open interest is over double. Yeah, so we are rolling, definitely, because they have to roll by the end of this week. 2 days. So yeah. All right, guys, we've got 5 minutes here, but I'm going to finish it early because there's really nothing else to say. Trump is talking. We got a lot of headline risk. Be careful. I will see you a little bit later. Okay, let me just answer this one question. Good Vibes Only says, hi, have you noticed the volume in silver drastically reduced since 1st of April? What can be the possible reason? Well, first of all, silver volatility was an outlier. Silver should not be that volatile, okay? Possible reasons are the fact that finally we are over the fear that something is happening with silver and we're back into some sort of normality between the paper contracts and the actual physical silver. There is still a problem with not enough silver to cover the demand. So long term, I'm still kind of bullish on it, but I'm seeing a reduction in volatility purely because the paper and the spot have come back into some sort of normality. So, you know, because COMEX contracts are paper contracts on silver and gold. So, yeah. And also silver is in rollover too, because it's in K contract. It's also going to roll in July. So that roll tends to bring less trending moves statistically. It can happen. It's not like, oh, it never happens. No, it can trend in a rollover, but it's just less obvious and less frequent. Anyways, that's all I have for you for the metal markets. Join me and the gang later on for group coaching, but first you're going to be joining Coach Jay, Hoagie Bear, and probably JD. I don't know who's on today, but you have the opening call coming at you in about sort of 15 minutes or so. So do join them to see what they have to say in light of all the madness that we're seeing. That's all from me. I will see you a little bit later. This was the Metal Markets. I'm Marcus Stork D. I will see you in a bit. Take care.